Hi everyone, my name is Roslyn Hosugomal. My teammate is Ivan Oftana, and we are presenting Chapter 16, Accounting for Healthcare Organizations. For the contents of our presentation, we will be covering Learning Objective 1 and 2. So Learning Objective 1 is identify the different organizational forms and the related authoritative accounting literature for healthcare organizations. Learning Objective 2 is explain unique accounting and reporting issues in healthcare organizations. So before we delve into Learning Objective 1, we want to go over a brief background of the healthcare industry in the United States. So the healthcare industry in the United States went through a drastic change due to social, political, and economic factors. In the 1960s, the initiation of Medicaid and Medicare programs was created in an effort to make healthcare a basic right and to be regulated at the federal level. In the 1980s, managed care systems was initiated by employers and insurance companies in order to bring down the cost of providing health coverage. And in the 1990s, comprehensive healthcare reform became a political issue at the federal level. So, as a result of these increasing concerns regarding healthcare costs and coverage, the Patient Protections and Affordable Care Act was passed in 2010. So today, healthcare organizations are complex entities that cross private, public, and non-profit sectors, has costs that grows faster than inflation, has capital construction that requires extensive financing, and such organizations and its managers face public scrutiny and government oversight. So now we begin with Learning Objective 1, identify the different organizational forms and the related authoritative accounting literature for healthcare organizations. Today, over a half of hospital non-federal care is provided by not-for-profit organizations, with the remaining care being provided by approximately equal number of governmental and for-profit hospitals. We are talking about the healthcare organizations in the United States, by the way. The profit organizations are sponsored or supported by investors, so they have defined owners, and the not-for-profit organizations are either business-oriented or governmental in nature. The business-oriented nonprofit organizations are sponsored by their communities, religious organizations, or not-for-profit universities. The governmental nonprofit organizations are sponsored by either federal, state, county, or city governments, and also could be sponsored by public universities. The services that these organizations provide are clinics, CCRCs, HMOs, and other healthcare plans, health agencies, hospitals, nursing homes, rehabilitation centers, and integrated systems that can be a combination of two or more of these organizations. The generally accepted accounting principles is the accounting literature for used by healthcare organizations, and it is determined by the Financial Accounting Standards Board, FASB, and the Governmental Accounting Standards Board, GASB. And GAAP for hospital and healthcare organizations have been influenced by the efforts of these other three organizations: the American Hospital Association, the Healthcare Financial Management Association, and the American Institute of Certified Public Accountants. So FASB is the sole authoritative source for non-governmental and for-profit hospitals, and the AICPA audit and accounting guide healthcare entities provide non-authoritative guidance for non-governmental and for-profit hospitals. And GASB is the authoritative source for governmental and business type of healthcare organizations.
Afternoon, everyone. I'm Yvonne, and I will be going over Objective 16-2, which is to explain the unique accounting and reporting issues in healthcare organizations. Now, to begin this objective, we first need to learn the financial statements used. So within FASB, the statements are the balance sheet or statement of financial position, statement of operations, the statement of cash flows, and the statement of changes in net assets. And within GASB, the statements are the statements of net position, statement of revenues, expenses, and changes in net position, and lastly, the statement of cash flows. After understanding these financial statements, we can move on to the assets limited as to use. So the limited as to use is defined as assets without donor restrictions, whose use is limited by the governing board or contracts or agreements with outside parties other than donors or grantors. And within FASB, or the FASB standard have the NFP healthcare entities identify assets limited as to use, and within GASB standards does not provide for reporting of assets limited as to use. Therefore, government healthcare entities generally do not identify assets limited as to use, but they do report restricted assets, which are assets restricted by external parties. And moving on to the investment, FASB standards requires that the NFP organizations value purchases of debt securities and equity securities at acquisition price, and at subsequent measurement dates, NFPs report debt and equity securities at fair value. And then within GASB standards, GASB standards followed by government entities require that changes in the fair value of certain investments can be reported in the statement of revenues, expenses, and changes in net position. And then changes in fair value are recognized as part of investment income or revenue. And moving on to the operating statement, uh, FASB standards allow flexibility in displaying results of operations, and then flexibility is allowed in classifying results of operations as operating and not operating, earned and unearned, or recurring and non-recurring. And it also includes performance indicators to report the results of operations. And then GASB standards allows for less flexibility in the display of operations, requiring that government healthcare entities display operating activity uh, separately from non-operating activity. Moving on to the revenues, FASB standards indicates that exchange transactions such as patient service revenue are recorded following the FASB ASC Topic 606, and then revenue from contracts with customers is evaluated through a five-step process. And then this five-step process is shown on the slide. And then the GASB standard indicates that service revenue is recorded at the gross amount when services are rendered. Contractual adjustments are recorded as contra revenue accounts for the difference between the gross patient service revenue and the negotiated payment by third-party payers in arriving at net patient service revenue. Moving on to donated materials and services, FASB requires that material amounts of donated materials must be reported at fair value as both contribution revenue and an expense or a non-cash asset. And then GASB standard requires recognition of donations of materials at fair value, but does not provide for the recognition of donated services. Now moving on to the expenses, the FASB standards indicate that NFP healthcare entities should determine if uncollectible amounts, either implicit price concessions or bad debts. Now, an implicit price concession exists if it is likely the NFP healthcare entity will accept a discount or concession to standard pricing before a credit risk assessment can be made. A bad debt occurs when a patient has been determined to have the financial capacity to pay for healthcare services but is unwilling to settle the claim. GASB standards require estimated for uncollectible patient accounts receivable to be recorded using contra revenue accounts rather than expense accounts. Now moving on to the statement of cash flows. The difference between GASB and FASB on the statement of cash flows would be that under FASB is divided into three sections that are the operating, investing, and financing. And under GASB it is divided into four sections, and that they are the operating, non-capital financing, capital and related financing, and investing. And this concludes my group's presentation. Thank you. Thank you for watching.